Okay, we are back. We talked about fair value gaps today, and today we are going to talk about the other concept, which is very, very important, which is order blocks. We're going to simplify order blocks because you know the goal of this course is not to overcomplicate things for you. We are going to talk about what they look like, what they are used for, levels to look out for, and quality of order blocks. Now, order blocks are actually one of my favorite concepts, even though we are going to be using fair value gaps a lot, and fair value gaps tell you a lot about price. Same thing with order blocks, they tell you a lot about price. Let's talk about order blocks because order blocks and fair value gaps are going to be crucial when it comes to predicting the bias of the market, having entries, having exits, multiple things. So let's break down order blocks in a very simple way. So let's first of all talk about what they look like. So we're going to talk about two order blocks. We have order blocks and continuation order blocks. And yes, I could give you 5 different names for the same order block, but I'm going to simplify it. We have an order block, which is, we can call it the reversal order block, and a continuation order block. Now, what an order block is what they call a block of orders before the actual move. The reason why it's called an order block is because what we think about when we are entering in an order block is there was a big player that entered in this area, which means that they had to sell and they had to generate the liquidity before the actual good move. So that is what creates the block of orders before the large move, right? So the order block is going to be the down move before the move up, or the up move before the move lower. So a bearish order block is a bullish candle, and a bullish order block are bearish candles. They can be one, they can be multiple, right? And by the way, people give different names. For example, if you just look at this order block, or if you look at all of these, listen, the best strike rate that you are going to have and the best risk to reward is going to be when you look at all 3 in total. Well, probably not the best risk to reward, because the smart money concept traders, they go to this extreme and they think, oh yeah, this is always going to work, when most of the time when the market reaches this extreme, it just breaks through. That's why smart money concept traders are so low in strike rate. So personally, we always look at the body of the candles that form the down move before the move higher. Doesn't matter if it's 1, doesn't matter if it's 3. You always look at all of the candles, right? So we have the normal order block, and then we have the continuation order block. This is basically the continuation. You can see it here in blue. This basically what we have is move lower, move higher. This is the order block, right? This is the order block we talked about above. But then we have the continuation order block, which is after we have this move higher. Let's say we have a tap of the reversal order block, right? We have this move lower, and then that move gets created by a market shift. By the way, forgot to say, order blocks are created through market shifts. So when we see this market shift yet again, and we have a down move, that means that we have created another order block. This is a continuation order block. You can see we have the tap, we have the market shift again, and there you go, you have another order block, right? And obviously, let's say that this is on a bullish push, this is supposed to be a continuation order block, right? But it gets reversed, and then this becomes a bearish order block. So order blocks are used for continuations, they are used for reversals. For example, if you now break all the way down, then this would be a bearish order block to move to the downside. Now, I have here an example which we are going to look at further on. We can see that we have sweep of the highs, we have this reversal, the market moves lower, market shift. You already know market shifts. So market shift, and then we have the tap of the order block, and the market moves to the downside. Move up, market shift, market taps it again, and then it moves to the downside, right? You can even see it here, but in this case, we did not tap it, and then we went for the low, right? We can see everything already working out here. Now, next question. What are order blocks used for? People will tell you that order blocks are used for everything. Oh, order blocks are for everything. No, they'll tell you the direction, and they'll tell you the entries. Just like fair value gaps, when you see bullish order blocks being respected, meaning multiple fair value, multiple market shifts. So for example, let's say that this continues moving to the upside. What are the order blocks telling you? The bulls are taking control. That's what the order blocks are telling you. And that's why this tells you that the direction of the market is still bullish. Let's say that this is the daily chart, and we have a very nice market shift like this at a very key level. this would tell you, okay, now we have a bullish order block. Now the market is bullish, right? So that's how order blocks tell you the direction of the market. That is very, very important for you to understand. Order blocks are very good in showing you the direction of the market. So this is both for market shifts and for continuations. So if we quickly go onto the euro dollar, you can see that we have the creation of this order block. And notice how the market is reacting now. Pulls back, moves higher. Pulls back to this order block, moves higher. Obviously, on the daily, they're not going to be as clear. But for example, right here, you can see order block, order block, order block. This was disrespected. Boom, order block, and so on and so forth. So it shows you the direction of the market, right? Now, it also gives you entries. We are going to look at, for example, right here, further on in the course, we are going to see how we are going to use order blocks for entries. Because we have entry number 1, this is going to be our entry number 1, entry number 2, and normally we have multiple entries. So you have entry number 1, entry number 2, entry number 3, all of them could be in order blocks, but we'll also look at fair value gaps in terms of entries. Now, next question, what levels do we look for? Just as the fair value gap, it's the open, the consequent encroachment, or the 50%. Again, I don't like the consequent encroachment. Or the close. You can see it right here. On a bearish order block, open, 50%, and close. Usually, by the way, I'm already giving you a possible way for you to execute on. When I see this sort of reversal, I like to put my orders at the open. I don't put it at 50%. I don't put it at the close, right? But I understand that the market can easily go all the way to the open and then to the 50% before it moves higher. Usually when the market goes to the close, this is a bad sign, especially because we're so close to actually disrespecting the order block. The reason why the close is important is because if the market closes above it, then all of a sudden we have very bad news for our entries. Right? So that's why the close is important. The 50%, usually that's when we get the most amount of reactions, but I personally always like to use the open for limit orders, right? So that is the 3 levels for order blocks. Let's go into the quality of the order blocks, because order blocks are everywhere. You need to understand order blocks are everywhere. And that's why so many people cannot become profitable with trading. Is because they see this video and they're like, oh, this is what an order block looks like. Oh, wait, he puts an entry at the open. Okay, I'm going to start doing that. But you need to understand, and we'll talk about narrative basically after this. You need to understand that narrative is extremely important. And I'm already going to show you something down here, which is the disclaimer, just like with the fair value gaps. All of these concepts have to be applied in the right area on the chart, high value areas, which is what we are going to talk about very, very soon. If we are not at a high value area, you don't trade, right? You do not trade if we are not at a high value area. So the low probability order blocks, they're going to be not at high value areas. It's not going to be a good reversal because it's going to be efficient price action. With an order block, what you want to see is quick movement. Quick movement, and you'll notice what I mean with efficient price action very, very soon. You want to see quick movement at a key level and then the market to reverse, right? Right here, you can see the market moves lower. It's very, very slow to break out. It barely reverses. It doesn't even close above the wick, right? We don't need the close above the wick, but it barely closes above, right? And all of this price was very efficient. You can see, boom, no fair value gap. That's what I mean with efficient price action. No fair value gaps, right? So the market, you can see that the market was slow going up, right? You want to see big reversals and then the tap in the move, right? Because if the momentum is not in your direction, then it's going to be hard for you to be consistently profitable and enter in good order blocks. So now, high probability order blocks, they are in high value areas. They are paired with fair value gaps. That is basically highest of highest probability order block. High value area paired with fair value gaps. Just amazing. Now, the reason why, by the way, we will use fair value gaps for entries, but order blocks are important because they're going to be a very key PD array, which we are going to use for management, for example. But you can see we hit the high value area, we have very nice impulse, we have a very nice close above, and we create this fair value gap, right? So this is going to be our entry. This would be our first entry right here at the order block. Why? Because you know that once we create this fair value gap, that this is just another level that the market might go back into and then move higher. But your stop loss is also going to be protected by the low, right? So this would be high probability because we have order block and we have fair value gap. And then I also have right here the example of a continuation one where we have fair value gap. And if the market comes all the way back down, you expect a quick reversal from here, right? Because let me ask you, why do you think we would want a reversal from here? It's because if the market comes all the way back down, let's say the market is here, you also want the fair value gap to be respected. Therefore, by the close of this candle, you would want it to see it at least here, which makes this entry a very good entry because at the candle closure, you are already in profit, right? Can you see why order blocks are great? Order blocks are going to give you very, very precise entries. The risk with that is that you might not get tagged in. That's why our entries are going to be at the fair value gaps. Well, we have the move here, and then we have the move higher, right? So we have high time frame key level, moves higher, creates the fair value gap, entry. This is a high probability entry. And then right here, we have another high probability entry, right? And again, what you are going to do in this case, well, I'm going to teach you in the trade management. You're going to be, okay, entry at the fair value gap. Order block is protecting me. 50% of the order block is protecting me. The close of the order block is protecting me. This fair value gap is protecting me. Can you see how high probability this is when you start pairing all of these concepts together, right? So if it's at a high value area and paired with a fair value gap, it's going to be very, very good, right? So for example, right here, high value area, very nice reversal. This is your first entry, right? In this case, we don't have any fair value gaps, but we have a high value area, and the daily bias in this specific day was bearish. The market sweeps the high, starts to break lower, boom, enters, and then we have the move to the downside, right? Very, very clear. Order blocks, they should be respected most of the time, right? If your trade is right, the order block is going to be respected. Now, let me tell you something. The other reason why I love order blocks is it's very, very clear. Is because let's say that the market now moves up and disrespects this order block. Well, notice the price action that we have just created, right? Let me go back up and let me show you the price action that we basically just created. If we move lower here, we have just created this, right? So let's go and remove this. This is not the sort of price action that you want to be trading. When the market is running the highs and it's running the lows and it's running the lows and it's running the highs, this is the type of price action you don't want to be trading. We will talk about this in the high probability and low probability times to trade. We'll talk about this still in the bootcamp. But just understand that when order blocks get disrespected, usually paired with daily bias, which we are going to talk about very, very soon, usually that is just meaning of range bound price action. And then you don't want to trade. Same thing here, moves lower, moves higher, moves lower, moves higher. Seriously? And then moves lower. Look at the price action that we are creating. So let's go up. Look at the price action that we are creating. This is the sort of price action where you don't know where it's going to go next. And if you don't know where the market is going next, then you don't have to trade, right? That's why order blocks are so powerful, because order blocks should be the last line of defense of price, which means that if your entry and your stop loss is at the order block and below the order block, it's very, very likely that you are going to win, right? So for example, right here, this is an example of the market coming back to the order block, right? Comes back to the order block and moves to the upside, right? So we have continuation order block. Notice how this one was always respected. this order block has been always respected, moves higher, creates this new order block, comes to this extreme. So notice how we have right here on this order block, if we extend this to the right, the 50% is respected, and the 50% is also paired with this order block, right? Can you see how beautiful that is? Let's put this in black. So you can see, we came to the 50% and we reacted. We came to the beginning of this next one, which is basically two order blocks paired. That's basically even a higher probability. And then we move higher, right? That is just beautiful price action. And if you know, you know. Beautiful, beautiful price action, right? So that is basically the lesson on order blocks. Order blocks are very, very crucial, and there's going to be an order blocks part 2, which we are going to dive deeper into order blocks and see more examples and see how we can use it. And you'll see that we will talk about order blocks on the daily bias, fair value gaps on the daily bias. Everything is going to get way more in depth from here, right? Everything you've learned so far has been the beginning stages, thinking like a trader, right? Trading trifecta, all of these, they are the beginning stage. We're chipping away at building a strong foundation, and then we will crush it, right? And then we will go deep, and then you'll have the entry model, because I will give you the entry model. You're going to be like, oh, that's funny. That's everything that we've talked about, right? So the people that will just go to the entry model, they're going to be like, well, but what about this? It's all on the bootcamp. If you want to get this Miro board, then make sure to check the link in the description. I hope you enjoyed, and I'll see you in the next one. Hope you enjoyed this lesson. Click right here to watch the next one. And if you are struggling with overtrading, then click right here to check out Trade Blocker. Peace.